In the early 2000s, Wall Street's top currency traders started noticing a bizarre anomaly in the global financial markets. Massive waves of capital were moving billions of dollars across international borders, effortlessly shifting the value of major currencies like the Japanese yen, Australian dollar, and New Zealand dollar. Institutional hedge funds assumed they were competing against rival multi-billion-dollar banks or sovereign wealth funds, but they were entirely wrong. The entity that was outsmarting global finance wasn't a suit-and-tie Wall Street executive. It was a massive, decentralized army of everyday Japanese housewives operating right from their kitchen tables. In the financial world, this collective force became famously known by a single pseudonym, Mrs. Watanabe. The backdrop: Japan's lost decade. To understand how ordinary homemakers became elite macro traders, we have to look back at Japan's economic crisis of the 1990s. Following the crash of the Japanese asset price bubble, the country entered a prolonged period of economic stagnation known as the Lost Decade. To stimulate the dying economy, the Bank of Japan cut interest rates down to a staggering 0%. Traditionally, Japanese households saved money by putting it into low-risk bank accounts. In Japanese culture, women traditionally managed the entire household budget, handling all the savings and investments. With interest rates at zero, keeping money in the bank meant their family's life savings were losing value every single day. The housewives knew they had to find an alternative solution to survive. The secret weapon: the yen carry trade. Around the same time, the internet became widely accessible and online retail forex trading platforms emerged in Japan. The housewives discovered a simple financial loophole called the carry trade. The strategy was brilliantly simple. They borrowed money in Japanese yen at practically 0% interest. They converted that yen into foreign currencies with much higher interest rates, such as the Australian dollar, which offered around 5% to 6% interest at the time. They pocketed the pure interest rate difference, the swap, as daily passive income. Because they were utilizing high leverage offered by retail brokers, a small household saving of $10,000 could be traded as if it were $200,000, compounding their daily interest returns exponentially. Wall Street versus the housewives. While Wall Street traders overcomplicated the market with complex mathematical algorithms and chaotic charts, Japanese housewives kept it strictly disciplined. They treated trading like grocery coupon clipping: patient, highly calculated, and risk-averse. They would cook breakfast, clean the house, take care of the kids, and then casually log onto their computers to execute multi-million-dollar currency trades. At its peak, retail traders in Japan, dominated by these housewives, accounted for nearly 30% of all foreign exchange trading volume originating from Japan. They were moving billions of dollars daily, stabilizing the yen during panics, and aggressively punishing any Wall Street hedge funds that tried to short their positions. The crackdown and legacy. Their massive success eventually caught the attention of the authorities. In the mid-2000s, Japanese tax officials began raiding suburban homes, discovering that seemingly ordinary housewives had accumulated millions of dollars in undeclared trading profits hidden under their mattresses or in secret accounts. Even today, Mrs. Watanabe remains a legendary symbol in global economics. They proved that a collective group of everyday retail investors, armed with discipline and basic internet access, could successfully outmaneuver the most powerful financial institutions in the world.